All right, so we had another really crazy week. S&P obviously hitting a new all-time high was probably the biggest news from this past week. I want to talk about that. I want to talk about earnings. I want to talk about Bitcoin. I want to talk about Bitcoin versus gold and some other interesting topics. So first things first, if you get value out of the video, please like and subscribe. Check out the links below as always. So let's get right into it here. So again, S&P hit a new all-time high. It broke 6,800 for the first time. It was up about 2% on the week. So like I said, I remember saying, was it maybe a month ago, that I think the S&P is going to hit 7,000 this year. I'm still very confident in that. Number one, because, 7,000 versus 6,800 is not a lot, right? That could happen next week, to be honest. We have, I think there's a virtually guaranteed chance of one rate cut before the end of the year. And more than likely, we're going to see two. And not only that, arguably as important as cutting rates is the Fed is going to be ending, well, overwhelmingly likely that they're going to be ending QT and possibly starting QE, which again, like I said, is arguably even more positive for the stock market than lowering rates. So that's something that's not really being talked about that I think is important as well. But as far as the stock market goes, where we are right now, honestly, like the biggest thing that can cause a major sell-off is, Trump, right? Let's be honest here. The most likely scenario for let's say we're, 10, 15, 20% lower than where we are right now in the new year. The most likely reason for that is probably Trump, right? And again, if we're S&P 7,500, it also most likely is Trump as well. So let's be honest there. But again, other things certainly could happen. Let's not be too narrow-minded here. But I mean, that is the biggest concern right now. But when you look at Fed easing, when you look at, yeah, it's definitely not a strong economy, but it's certainly not a super weak economy either. That most likely points to stocks going up. And another thing that again, the doomers when it comes to the stock market, the people that they always think it's a bubble and it's always overvalued and there's always a problem. I'm sure most people should know who those kind of people are. The problem that those people never really tell you is the modern day economy is entirely dependent upon the stock market going up. Right? I was listening to a good interview recently with Joe Consorti, not a very prominent guy whatsoever, but he made a very good point in that he said that if you go back to 2008, it took the Fed 6, 7, 8 months to respond to what was going on. And that is the most likely reason that there was such a deep sell-off. When you go back to, 2020, I think it was like a week or two. When you go back to 2023 or whenever the Silicon Bank collapse was, it was like less than a week. So the whole point there and why that's relevant is when you look at the Fed's willingness to step in and, for lack of a better word, bail out the market, over time, that time has gotten shorter and shorter and shorter. And why is that important? That's important because that means that the chances of seeing large bear markets in stocks is becoming less and less likely. And even if it does happen, the chances of it happening for a prolonged period of time is also less and less likely. So what is my point here? My point here is always be a net buyer of stocks. I think it's fair to say that you should probably change your allocation a little bit depending upon how expensive the market is. But I think that anybody telling you that you shouldn't be buying stocks right now, even though the market is clearly overvalued, I think that that's the wrong mentality, right? I think that's the wrong mentality because, like I said, if someone told you that the S&P was going to be at 7,500, 3-4 months from now, would that surprise anyone? Like that wouldn't be the least bit surprising. So let's say we pull back 20% from 7,500, that's like what, maybe 1,500 points? That's like 6,000, which is like 10% from here, right? So I think that the biggest mistake that people make is trying to time the market, right? And especially when you're younger, right? And even when you're older too, like even when you're older, at the end of the day, the best strategy, and again, this has been tested time and time and time and time again. Obviously, if you have a crystal ball and you can tell when the market's going to top, it would be best to try to time the market, but nobody knows that. Nobody can tell that time. So that's my prediction on stocks. I still think we're going higher, even though I think we are overdue for a pullback. But I still think we're going higher because when you look at stocks, well, the best predictor of the future is what is going on right now and what has gone on in the recent past, right? And when you look at the recent past has been every time we see a pullback in stocks, the market goes back up. So that's my prediction, at least. One of the main topics I wanted to bring up today was Bitcoin versus gold. Now, obviously, gold is actually, frankly, I think Bitcoin's actually beat gold over the last year. But year to date, gold is definitely the number one performing asset, at least of the major assets. But when it comes to gold, this is not going to happen. This is not going to stay this way forever, right? Bitcoin is obviously superior to gold. Number one, and the most obvious reason, is the main reason that people are buying gold and buying Bitcoin is a hedge against inflation or debasement, however you want to put it. And when it comes to that argument, it's very easy to prove that Bitcoin is better than gold because gold is not truly scarce. There will always be more gold. But there will not always be more Bitcoin, right? And not only will there not always be more Bitcoin, there will come a time to where not only is the supply of Bitcoin not going up, it will be going down, right? And this is very important. Is that this is important because, you know, I was watching a video recently, and it was a guy just going around and asking people on the streets, and the clear majority of people did not know that Bitcoin, there's a hard cap on it. Now, again, my hypothesis is always that, you know, the majority of people are financially and economically illiterate. So this is why I think that I don't know if the majority of people ever will own Bitcoin, but I certainly think that given we're at like 1 or 2% uptake right now, it's certainly going to go higher. And the reason for that is, number one, Bitcoin is going to continue to outperform. And number two, inflation is going to continue to run hot, which means people can either, you know, have their standards of living go down, or they can buy Bitcoin. What do you think people are going to choose? And also, when it comes to gold versus Bitcoin, can you move? Again, people love to say, oh, people, you know, the other reason that you know that Bitcoin is better than gold is that the gold bugs always resort to a straw man, right? They'll compare the strengths of gold to the weakness of Bitcoin. And whenever someone does that, and people do this all the time with politics and with stuff too, but whenever people do this, you can tell that they're either lying or they're just being dishonest, or they're misleading you. Because if gold was truly better than Bitcoin, you would compare the strengths of gold to the strengths of Bitcoin. But they don't do that, because when you do that, Bitcoin is obviously better, because the main reason that you own it at the end of the day is to shield against inflation. And if you had to choose between an asset that is somewhat scarce versus an asset that is absolutely scarce, nobody in the right mind would choose the asset that is somewhat scarce. Yeah, gold has a better history. That's true. But who cares, right? Who cares, right? Because we are in a digital age. We are not in this isn't, 100 years ago, 200 years ago, 1,000 years ago. And another thing the last thing I'll bring it up here is, I think people drastically underestimate the importance of not being able to be censored and portability, right? This is something that, especially in the West, I think maybe not as much in third world countries, but in first world Western countries, we take for granted way too much our ability to have stability within our areas, right? We take that for granted way too much. And a lot of places that's already starting to bite them in the ass. But that is going to be something that is going to get worse over time, because people take it for granted way too much. And this is going to be a massive advantage to owning Bitcoin, because if you have $1 million in gold and your country goes belly up, or wherever you're at goes belly up, or there's unrest, there's rioting, et cetera, et cetera. If you have your, 10% or 50% of your net worth in gold, you are screwed, because you are not moving with that gold. I mean, you can try, but it's not going to work very well. If you have Bitcoin, on the other hand, that's another story. You can move easily. nobody would know you have it. So I think that I've made several videos on this, but the whole gold versus Bitcoin is very easy. And speaking of that, Peter Schiff, Bitcoin supply growth isn't limited to what's being mined. What matters most is the supply that existing holders want to sell. Right now, most existing Bitcoin isn't for sale, but once holders decide they want out, supply explodes. Without increased demand, the price collapses. So again, this is wrong for several reasons. Number one, without increased demand, the price collapses. This is not true, right? Because if you know anything about Bitcoin, you know that the supply of Bitcoin, at least the new Bitcoin coming online, gets cut in half every 4 years. So even if the demand stays the same, the price will continue to go up because the supply is going to go down over time, right? So again, Peter knows this. He's just lying because he wants to shield gold. But this is the thing. This is my whole point here, is that the people that say this kind of stuff, they're just lying and misleading people. Adam Livingston, 7.5 trillion sitting idle in money market funds earning negative real yield. There is no reason to have your money in, sitting around when STRC exists. The fiat crowd's risk-free return is literally guaranteed. Time decay. So again, something that I thought of recently is, have you ever heard of someone say, if I'm getting, let's take like, Bernie Madoff, for example, right? You're getting a guaranteed, if someone like financial advisors and people always say, oh, if someone's offering you up a guaranteed 15 or 20% return, always assume they're lying or never invest because they're probably lying or misleading you or whatever. But a thought hit my mind in that I would say, if someone's saying that they're giving you a guaranteed anything, you probably should be skeptical. And what do I mean by that? Whenever you look at government bonds, right, specifically the short-term ones, they always say it's risk-free, right? It's quote-unquote risk-free, right? And that, he says it here. But I think that whenever someone's telling you that they're giving you a guaranteed any number, whether even if it's 3-4%, you probably should be skeptical. And the reason for that is that the reason the government can give you a guaranteed whatever they're giving you is because they're getting more than that by doing something else. And this is why you probably should never invest in any investment when the selling point is guaranteed X. Now, again, they might say the same thing with STRC or somebody, but they never say it's guaranteed. They say it's a yield backed by Bitcoin, right? They never say it's guaranteed. They say it's a yield backed by Bitcoin. So that's an important caveat. Finance guy. Now, again, this is a popular guy on Twitter, and I'm bringing this up because I don't even think it was 6 months ago. I made a video, or I mentioned in a video, this guy was trashing Bitcoin. And again, he obviously didn't know what he was talking about, but turns out he has came around, right? And he says, none of my close friends own Bitcoin. They mostly all own homes, then buy stocks, and like talking about the stock market, but they think Bitcoin is too risky and speculative. Soon they will realize that not owning Bitcoin is the bigger risk. We are still early. And again, this is what I always say, right? This is what I always say. We will know, like people always ask, the big question within the Bitcoin space is, when do we know that we've reached the tipping point? Or in that, when will we know that the returns of Bitcoin will taper off? And I've always said that when it's a standard thing that financial advisors recommend it without even thinking about it, when pension funds invest in it without even thinking about it, when the average Joe invests in it without even thinking about it, then we've reached the point of, the tipping point or diminishing returns. But we're not even close to that yet. Like, we are not even close to that. So that's why probably time to get some Bitcoin, right? Probably time to get some Bitcoin. The other thing here from Rajat Soni, who brings up an interesting point here. What if we're already in a Bitcoin bear market right now and the sellers are trying as hard as they can to bring it under 100,000, but it's not working? This is an interesting thought experiment. I don't believe this. I'm fairly confident in the idea that the traditional Bitcoin cycles are over. I'm not saying we're not going to see bear markets. I'm simply saying that, number one, the cycles are if they're not a thing of the past, they're close to being a thing of the past. And the days of 80, 90% drawdowns are almost certainly over. I'd be very surprised if we've seen significant drawdowns like that again. But this is an interesting point, right? This is an interesting point because if we are already in a bear market and we don't go below 100,000, well, that's actually pretty encouraging, to be honest. Again, I don't think this is the case, but I think it's an interesting thought concept. So let's talk about earnings from this past week. The biggest name from this past week was Tesla. Tesla actually had pretty bad earnings. They beat on revenue, but they missed on earnings. They were down on the week. Again, I'm not a fan of Tesla just because I'm not sold on. At the end of the day, they're a car company, and car companies they're very competitive. They don't have good margins. And again, a lot of people are saying, oh, they're going to win on robots and autonomous driving and all that kind of stuff. But again, those are also competitive industries, right? Like one of the hallmarks of a very good company is a moat. And I don't see how 10 or 20, 30 years from now, Tesla is going to have an obvious moat over their competitors, right? So that's why I'm not a Tesla shareholder. The next one here is Steel Dynamics. They beat earnings and revenue. They were up on the week. They also hit a new all-time high. WRB, this is a company I really like. I've owned them in the past. I did sell them because I think they're a little bit overvalued, but I definitely would buy them if it got cheap enough again. Beat earnings and revenue. The next one, Coca-Cola, beat earnings and revenue, although the demand was actually down a little bit, but they were up very significantly on that news. So good news if you are a Coca-Cola shareholder. The next one is going to be Netflix. Netflix missed earnings and revenue. They were down quite significantly on that news. Obviously, they've had some obvious issues recently, which I won't get into, but Netflix also is a company that I don't ever see myself owning just because they're way too competitive of an industry. And not to mention too, their management clearly is making some very stupid mistakes, especially if what's gone on recently. The next one is Chubb. Again, another insurance company, another company that I like and I would buy if it was cheap enough. Beat earnings and revenue. They were up significantly on the week. Manhattan Associates. This is another one that I've owned in the past that I would buy if it was cheap enough again. Beat earnings and revenue. They were actually, looks like they were down on the week. This is a company that's very expensive though. EWBC, this is one of the better regional banks, in my opinion. I have owned them actually up until very recently. I sold them just because I wanted to get them a little bit cheaper. They're near their 52-week high, so I would prefer to get them a little bit cheaper. They did beat earnings and revenue. They were up quite nicely on the week. Amphenol, this is a company that I bought at I think it was $50 or $55. It was like 10% of my portfolio. I went all in, if you want to call it all in. I sold it at about 100, thinking I was super smart. I doubled my money in like a year or two. Turns out it's at 134 right now. So again, I don't look quite as smart anymore. But again, this is a very, very good company. I definitely would buy them if it got cheap enough again. But as we can see here, they're just way too expensive. 36% above their historical price to free cash flow and PE, which both of those numbers are arguably expensive. So they would have to be below $100 a share for me to buy them. So if I'm being honest, selling them around $100 a share was still the right move in the end. Well, at the time it was the right move, but that's frankly, that's how, good investing works, right? You buy when stuff is cheap and you sell when it's expensive. The next one is Agilent Technologies. Beat earnings and revenue. They were up on the week. LII, another company that I have on a watch list. They beat earnings. They missed revenue. They were down pretty significantly on the week. Moody's. This is one that I think is a really good company. Have owned it in the past, but I'm waiting for it to get cheaper. Beat earnings and revenue. They were up quite nicely on the week. It looks like they actually had a very nice spike after the earnings, but they did sell off a little bit after that. The next one is going to be Thermo Fisher Scientific, another one I have on a watch list here, but I think it's too expensive. Beat earnings and revenue. They were up quite nicely on the week. The next one is going to be Lam Research, another one that I bought this company around $65 or $70 a share. I sold it around 110. It's now at 151, right? So a similar story to Amphenol there, but again, I think it is significantly over. It's 69% above its 5-year price of sales, 49% above its historical PE, 40% above its historical price to free cash flow. So I certainly would buy it if it got cheap enough again, but I just think it's way too expensive where it's at right now, but I do think it's a really good company. WCN, another good company here I have on a watch list, beat earnings and revenue, and they were up on the week. The next one is ALLE. This is another one I have on a watch list. I have owned it in the past. Beat earnings and revenue, although they were down on the week. American Airlines, again, the airlines are a good barometer on how the economy is doing, at least to some degree. They actually beat earnings and revenue. They actually reported surprisingly good earnings. They were up quite significantly on that news. And again, whenever you see the airlines posting good earnings, typically that's at least a moderately good sign for the economy, right? Because what do people do when they're, not making as much money or they're not as well off? Well, not traveling is probably one of the first things that they do when they don't have as much money, right? So, and what does that mean? Well, the airlines make less money, but again, clearly that's not happening, at least yet. And the next one here is BPOP. This is another very good regional bank. They're actually based out of Puerto Rico, I believe. Another one that I've owned recently. They beat earnings. They did miss revenue. They were down a little bit on the week. And then the last one here is KNSL. This is, again, one of the better insurance companies out there. I've owned them in the past. I certainly would buy them if they got cheap enough. Again, I think they're still a little bit expensive where they're at right now. They were actually down quite significantly on their earnings news. They're probably not far off being a good value where they're at right now. Yeah, they're significantly below their long-term averages. But again, a PE of almost 21, that's still not exactly cheap for an insurance company. So I would probably look at buying them if they went below about $400 a share, which again, they're not far off. So that is the news from this past week. Like I mentioned at the start there, if you got value, please like, subscribe, comment, check out the links below. Very much appreciate the support and stay tuned for more.